You and I talk about the equity markets a lot, but how fragile is this rally to you now?
There does seem to have been something of a shift in sentiment towards the positive this year. I mean, these record highs obviously haven't happened overnight. We had the initial fillip in the first trading day of January after the US fiscal cliff was averted. But on the basis that obviously corporate earnings remain strong, which actually means that on a historic basis the market isn't overvalued at this stage. Obviously we've got the QE punch bowl, which the Fed will not remove until such time as the US economy can stand on its own 2 feet. And of course, overarching all that, I think investors are coming round to the realisation that the negative real returns they're getting on cash, they need to look at other asset classes for some kind of yield, let alone the potential for capital appreciation. And equities seem to be the asset class of choice at the moment.
We're looking for, what, 160,000 added on the non-farm payrolls. If we don't get that, could it hit equities hard?
Well, as with anything, you're absolutely right, Axel, of course. If it was to be well shy of that figure, the market would unquestionably react because, of course, quite apart from the Chinese numbers you've just mentioned, investors are putting a lot of store in what seems to be a growing US recovery. I mean, obviously, the housing market is showing some real signs of life, which is important to the US economy, and that would also underpin the resilience of the consumer, who's actually been remarkably robust throughout the crisis. So it remains probably and arguably the most important economic piece of economic data that we can see.
What's your target on the FTSE now?
We haven't got a target as such. We continue to say to keep the bottom up approach, but certainly in the year to date we've already seen a 9% rise in the FTSE 100, and that's quite apart from the dividend income you can get on top of that. So,
but how far can the bottom up approach push the index?
Well, the fact of the matter is, as we're seeing with the shareholder activists in Apple at the moment, quality companies are sitting on more cash than they know what to do with. Sooner or later, that's going to have to be deployed, be that M&A, increased dividends, share buybacks, or indeed investment in new technology and indeed staff.
Buying any financials?
Financials, well, interestingly, already, as you might expect, there are already calls that maybe Aviva had a share price reaction yesterday which was overdone. Even after the adjusted figure, partly due for a technical reason on the share price, the shares are still yielding nearly 6%. Clearly, there's a lot to do in terms of the transformation programme, but I think investors are realising that yesterday's price fall might have given a good entry point.